The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Welcome to the Accunet Mortgage and Realty Show. I am David Wickert, Chief Millennial Loan Consultant at Accunet Mortgage, and joining me this lovely Sunday, one Tim Holdman, Loan Consultant at Accunet Mortgage. Good morning, Tim.
Good morning, David. Happy to be here.
Good to be with you, man. If you have a question or comment, you can call or text us on the Accunet Mortgage talk and text line. That number, 414-799-1620. A busy-ish week in the mortgage and real estate world. I would like to kick things off with the widely expected and not all that surprising Federal Reserve rate cut. So on Wednesday, the Federal Reserve Open Market Committee met and released their notes that they are going to be dropping the federal funds rate down a quarter.
Wait, David, does that mean everybody who is refinancing or getting a mortgage right now, did their rate just drop a quarter percent?
You must listen when Dad and I do this show, and I do the exact same prompt question. It's just like, oh, yeah, then just like, huzzah, all my rates went down.
Magic.
And in fact, it's funny that you say that because we sent out an email blast to Accunet's many past customers on Tuesday afternoon, like 23 hours in advance of this Fed rate cut, because the headline was the Fed is cutting rates again, but mortgage rates are up.
Right.
What? And
how does that make sense?
Well, you know what? As we noted in our email, for the third time this year, for those who forget, the Fed raised the Fed funds rate 4 times last year, and now has promptly cut the same Fed funds rate 3 times this year. So wrap your mind around that monetary policy. But they've cut rates for the third time this year, kind of in an attempt to, here's the fancy phrase I used, inoculate the American economy from recession amidst broader global financial uncertainty, which means Fed Chairman Powell is trying to keep the party going another, hour,
right,
as this bull run in the stock market and interest rates has, gone on for nearly a decade. So the one way that the Federal Reserve can attempt to toggle the economy to do what they want it to do is by impacting the Fed funds rate. Okay.
And what types of debt does the Fed fund rate affect when they cut by a quarter percent?
At least two things. One is it influences the prime rate, which is now going to drop from 5% down to 4.75%,
which was 5.5% last year.
Right, or even at the start of the year.
Yeah.
And then the prime rate then influences other things, most specifically home equity lines of credit. After you get past that teaser rate of 6 months or a year, reality sets in, and so maybe you're getting prime on your home equity, your HELOC at 4.75. You're probably actually paying like prime plus 1, and then also credit cards, and just Fed policy that happens in Washington D.C. It sounds wonky, but okay, back here in the Midwest, as we noted in our notes to our past customers, the expectation of this Fed funds, or this Federal Reserve cut, was already baked into rates. What's funny is the Chicago Mercantile Exchange has a futures market, which is like a parlor for, hey, people in the financial world, what do you want to bet that the Federal Reserve is going to do? And overwhelmingly in the days and weeks leading up to the Fed meeting on Wednesday, every expectation was that they were going to cut rates. And so it was already baked into the cake for what rates had already done leading up to the Fed meeting this week.
For the rates for first mortgages, which is what everyone is
correct,
wondering about.
And the broader market in general.
Right.
Because the other half, so per the headline of our email, the Fed is cutting rates again, but mortgage rates are up. Well, that's because generally the relationship is good economic news is bad news for interest rates.
Right.
And so we kind of had some modestly good economic news this week, at least two items. One, the U.S. and China trade war beginning to
starting to work things out a little bit.
So if the U.S. and China can come back together and kind of make some kind of headway, that has already hurt rates and might hurt rates more.
Right.
And the other half of that is that Brexit is kind of generally going to come to maybe an orderly conclusion. Parliament has been meeting, and for anybody who didn't remember, back in 2016, Brexit, when Great Britain decided to leave the European Union, is what drove rates down, just like
to historic lows.
Overnight, historic lows. And so now that the uncertainty that has kind of been surrounding Brexit is going to become more certain, means that
more
interest rates have
economic
climbed.
News.
More interest rates have climbed. And I note in our email, I had noted 2.5 things to know. So the first two we noted, and the other half thing is, don't forget, we're already a full % lower than we were last year. So it's all relative.
Yeah.
So when we come back from this first break, what I'd like to do is break down where rates are today in comparison to where they were this time last year, and then move on to a couple stories kind of from the front lines of mortgage lending and real estate from our week at the office. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I am David Wickert. That is Tim Holdman over there. Good to be with y'all this morning.
Good morning.
And back to, the Fed has cut rates, and at the close of business on Friday, just to give everyone a sense of where the world is now, Accunet could offer 3.99% on a 30-year fixed with just $800 in cost. The APR is 4.03. And what I alluded to before our first break here was we are down from this same time last year when rates were floating around
4.99.
Yeah. And what I noted, almost everybody who got a mortgage, who bought a house last year, got a mortgage, or maybe refinanced, is probably in the money to refinance. And so, if you have a $200,000 loan and you drop your interest rate by 0.5%, which is, you got a lot of cushion if we're a full % down and you only need 0.5% to make it worthwhile.
Right.
That's $720 a year in
free money.
Hey, gas is cheaper this year. Would you like to pay less for a tank of gas? Yes, I would. Thank you very much. Mm-hmm. It's the same with your house. We had noted last week, Dad got interviewed by the Wall Street Journal. The chief economics correspondent, Nick Timoreos. That's a pretty nice title. As good as chief honesty officer is, chief economics correspondent kind of wins that
at the Wall Street Journal.
At the Wall Street Journal,
add some weight.
Yeah, not the West Troy Gazette. Dad got quoted, and I'll read you, of his, because I sat while he got interviewed over the phone, and it was like a 10-minute interview, and
sure.
Dad got quoted, quote, "If you are thinking about buying a home, that drop in rates is very important," said Brian Wickert, president of Accunet Mortgage in Milwaukee, Wisconsin. But the drop in rates has been gobbled up by the increases in price caused by higher demand and lower inventories. Which
is half true.
Yeah, it's like Dad gave 20 sentences of good, thoughtful commentary. And
there was a more detailed explanation behind that quote that wasn't...
because ultimately the drop in rates is kind of just, it's found money because we were able to connect Mr. Timoreos to one of our home buyers who had been looking, and, huzzah, rates fell, but that had literally no correlation or impact on her home buying search. And so I wanted to segue, Tim, into two folks that you've helped who had accepted offers back in the spring and have continued. Rates have even come down 0.5% since the spring, which your first gentleman is going to have more money in his pocket now that he's might be buying a house a couple months later.
Yeah, the similarity with both of my customers that have recently gotten accepted offers who had accepted offers
for the second time.
Yeah, they had them back in the spring, and those deals fell apart for various reasons. But the similarity between the two is that the difference in rates between springtime and now did not even come across their radar as reasons to either wait or continue looking. There was absolutely was not taken into account at all in their reasoning on when they wanted to buy a house.
Had they continued pretty aggressively to search, or do you feel okay? They didn't get burned and sat on the sidelines. They'd been searching ever since,
looking for the last 6 months easily.
Okay.
And with both situations, the more real life element of families, whether they should buy a house or not, came into play because they both were first time home buyers. They both were saving dollars every month into their savings account that they could, and both times when they got the accepted offer in the spring, they could have bought the house, but they would have left themselves with very little left in reserve in their savings accounts.
You make me break out into a sweat, if only because
same.
You just bought a house, and man, I hope the heater doesn't go out in the middle of winter.
Or I hope your car doesn't break down, or heaven forbid, I hope you don't lose your job or something like that.
How's about your battery dies because it's suddenly cold outside and you have to get it towed?
Right. So they are both in much better positions now where they've continued to
save up money. Because
they
got 6 more months worth of salt and money away.
And they knew they were going to buy a house eventually, and as they were looking, they took some good financial steps, and now not only can they still buy a house at a slightly lower rate and with a slightly lower monthly payment, which is always nice, they are also have some reserve money left over to deal with the real life that comes after becoming a homeowner.
Well, and in some of the math that we had reviewed before going live on the air, the savings is maybe like $70 or $80 a month, which
it's not nothing.
It's not nothing. It's nice, but in fact, if it goes the other way, and it's
it's not going to stop anyone from buying a house or not buying a house at the end of the day.
And that's what I think is, Dad getting quoted in the Wall Street Journal is a good opportunity to maybe highlight the real life aspects of buying a house. And it's what we experience every day talking to folks. It's like, oh, you're having a kid or you're getting married, and suddenly you decide, I want to buy a house. So it just interesting to compare and contrast your customers.
There's the numbers side, which is important, and there's the emotional and real life side, which is equally, if not more important to most people, especially when buying a house, getting a mortgage for buying a house versus refinancing a mortgage on a house that you're already in, because you're already there. It's less of an emotional journey.
Yeah. All right. When we come, speaking of kind of in the spirit of you'll get it done if you really want to, I've got 2 stories to that effect when we come back from this break. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I'm David. That's Tim.
I am Tim.
You are Tim.
Good to be here.
And I want to get into 2 stories for folks doing the dance of how do we get from our soon-to-be old home into the new home. And so this first story is for a doctor who is moving to Milwaukee from out of state. Has a home to sell in their soon-to-be old state.
Sure.
And the ways in which, for these folks, a lot of things have to go right, maybe to help them get the situation that they want. And so at Accunet, we are able to help folks with what is generally called future income. So if you have an accepted job, and you're going to be starting that job within the next 30 to 60 days, we can use the base salary of that next future job to qualify you for the monthly mortgage payment.
And I think it's important to note, too, that there's a specific set of rules with that. Like, you have to have an official job offer letter from that future employer.
A start date,
a starting salary, and it needs to say that you have passed all contingencies of employment, like a background test, drug test, things like that.
And actually, so to that point, so for these folks who are medical professionals, they need license. So the two things, they need licensing to travel with them over to Wisconsin, which is going to be their new medical home. And that is not exactly an overnight
process.
Event. Right. And the second half is that they need to sell their home back home. And, ultimately the story here, Brian was the one who led the conversation with these folks, is there sometimes is quite a spread between what I'm going to call real life and mortgage life. Because in real life, this is a married couple. The husband has a soon-to-be accepted contract.
Right.
And the wife, also a medical professional, well, she's also going to be arriving in Milwaukee and
probably going to get a job.
Yeah, guess what? She's probably going to get a
job.
Not to mention, they've got like tens of thousands of dollars in a savings account that I have a feeling
they'll probably dip into if they need to.
They thought like, you know what? If it takes me, a little while to find a job that I really like,
it's going to be okay.
Right, it's going to be okay. But in terms of mortgage lending, kind of the approach of it's going to be okay.
Can't really go off of that for lending thousands and thousands of dollars.
Yeah, I know it makes sense in the real world, but it's just mortgage lending is the creation of investments at a pedigree of Wall Street, and so that's what we're in the mortgage manufacturing business.
Those doctors are unfortunately just numbers and statistics.
Not future income earners. And so, as Brian was consulting with these folks, and I was looped in as well, he was trying to, coach them up on what might be their maximum monthly payment. Right. Because I don't know if you know this, Tim, but it costs a lot of money to go to medical school.
Yeah, I've heard.
And so part of what is hindering these folks is a large monthly student loan payment.
Yeah.
And what I'm always struck by is, hey, if it had been me maybe on the Accunet side of consulting, I would have said, look, here's one way you might be able to reduce your stress is refinance your student loans to a lower monthly payment. I get it. You want to get after that debt and pay it down, but that monthly payment is getting in the way a little bit of your ability to borrow the money you want to buy your next house.
Because when you're trying to qualify for a mortgage, you have to factor in all the monthly payments as they show up on a person's credit report.
Correct.
And in the case of these doctors, also the carrying cost of their soon-to-be old home.
Right, because they're probably not going to have it sold in time.
Even if they sell it the day after they buy their new home, it doesn't actually matter.
Right. I have to pretend, that the people buying your home the next day, get struck by lightning while driving to the closing to buy your house.
Right.
So anyway, it's a positive outcome. It's just for these folks, it's going to take. Dad's ultimate advice was, you guys want to just come rent for a little while and figure out where you want to live in a city you've never lived before, and
not a bad idea.
Hopefully, then we'll be able to help them buy a house, after renting for a little while. But okay, story number one. We're at the bottom of the hour here. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I am David. That is Tim.
Good morning.
And we've been talking about some good stories, instructive stories about how this next one kind of gives me like if you really want to make this happen, you can.
Yeah.
Like
we'll make it happen.
Yeah, it's kind of like we're able to. It's just like whether you want to. And our previous stories might not be in that same category, but it's anyway. What we're really good at, problem solving.
Yep.
Or solution solving.
All we do is mortgages.
Yeah, it's true.
So, you know.
So for these folks, our colleague, Jason Weber, longtime senior loan consultant at Accunet, senior.
One of the most senior. Yeah.
He's not that old. All right. Was talking to some folks who have a home to sell. So again, the bridge loan. How do I get from my old house into my new house? And these folks happen to live in a very popular part of town at a reasonable they're gonna be selling their home and a very reasonable price range between like $300,000 and $400,000.
That's a hot market
yeah.
segment right now. That's
and they really don't have much of a mortgage left on their old home.
Also a good thing.
And for them, as I was talking about this with Jason, their fear is, boy, if we list our house for sale before we know where we're going next, we're going to be homeless in 2 weeks.
Right.
Because it's going to get snapped up that fast.
Yep.
Which, credit to their real estate agent. I mean, I'm sure they've seen their neighbors sell their home recently, and they're just like, wow,
that was quick.
Jill and Jack got what for their house 3 doors down in 5 minutes? So their concern is wanting to not have the stress of like, oh my God,
right.
Where are we going?
Because now you have to really giddy up and find a place. And, what if you don't find the place you really want, but you have to say yes because you don't want to be homeless after you sell your current home?
Right. And I get it. Moving is not fun. So moving twice is 1,000 times more painful than moving once. But for them, what's interesting, so they have the ability to get, if they wanted to, a bridge loan. And a bridge loan, among the many ways we try to describe a bridge loan, is getting at the equity in your old home before you sell it. And so for these folks, they might be able to get a bridge loan and liquidate like north of $200,000.
And then just to be perfectly clear, what are they going to do with that money once they liquidate it? They can
go use those now liquid funds, which they've borrowed against their old home,
right,
to go make a down payment on the new house. And see, as we said in our previous segment before the news break, when you have 2 homes, we need to calculate. Mortgage bankers like us, we are conservative. It's
worst case scenario type of people.
What if you never sell your old home? We have to make sure that your income can sustain you carrying 2 homes, even though, again, back over here in the real world, we know you're going to sell your home. Yep. It's all going to work out.
And not just 2 mortgages, but the taxes for each home, the homeowner's insurance premium for each home, the total cost of owning that property.
And so for these folks, let's just, to keep the numbers easy, hey, you're going to have $200,000 to make a strong down payment on your
very strong
on your new home. But because you've got the same one income trying to carry 2 houses plus anything else you've got going.
Yeah.
For these folks, they've also got a large student loan payment, north of $1,000 a month. Because guess what? They're trying to get after it and get that thing paid off. But what is always most interesting to me is part of our advice was, hey, you could pay off that student loan in full, thus eliminating the 1,000-some monthly payment, which gives relief to your debt-to-income ratio, which means you can qualify to buy your next home without having to sell your old home. That was met with resistance because they don't want to pay off that student loan in full at this moment. But what I always keep in the back of my mind is if they walked into a house and fell in love and were like, we want to move here no matter what it takes.
We have a way to make
it happen. Yeah. And I just always try to remind myself and all of Accunet that it's like people make an emotional decision that like, I want to live in this house. And then what we are really good at is putting together the game plan
Right.
when the game plan can be actually made.
And to your point, I mean, if we present that game plan and if they don't want to do that, then that I guess really means that the house that they found, they don't really want that house bad enough.
Exactly. So,
And that's okay.
Two good stories about how to get into your next home. And when we come back from this break, Tim, you've got an excellent story of someone that we're going to help by not helping them, which I think is an interesting tease. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. It's been story hour here with folks. Hey, how do I get from my old home to my new home? And Tim, you helped someone over the weekend.
Yeah.
Who got I'm giving away I'm Tarantinoing the story right now because I got an accepted offer. But what are the general circumstances of the person you helped?
Yeah. So first of all, for all the realtors out there listening to the program, we have loan consultants available on the weekend to help your procrastinator
Unexpected home shoppers.
Yeah, who maybe didn't do the good steps of getting pre-approved and ready before stumbling upon a home that they want to write an offer on, which is exactly what happened with a nice lady I connected with this past Saturday. Currently owns a condo and actually looking to downsize to a smaller condo.
Why? Because she doesn't like mowing the grass in the.
No, it's a condo. She's not mowing any grass. Come
on.
All right,
never mind. Bad joke.
No, just her family has decreased in size as time went on, and it's just too much space, and she wanted something a little bit smaller and a little bit closer to family. So, perfectly made sense, and went out and found the perfect condo and wanted to make an offer. So we connected that Saturday, got her pre-approved in 20 minutes, wrote an offer that day, and beat out, I think, 4 other offers.
Wow.
And got the offer accepted.
Slick.
She went a little bit above asking price, which I'm sure helped her case, but got the accepted offer. So the interesting thing about this lady's particular situation is that she had so much equity in her current home and is actually buying a cheaper condo for her next home that in reality, when the dust settles and she is in her new condo and the old one is sold, she does not want or, frankly, will not need a mortgage.
Because the proceeds from the sale of her
current
soon-to-be old condo are substantial.
Are darn near going to be enough to have completely bought the new condo in cash. But just like the situation we were talking about in the last segment, she needs to do the dance of, well, I want to buy this condo now, and she doesn't even want to have to burden herself with getting her current condo ready to sell until after she has moved into the new place.
So she wrote it without a home sale contingency.
No home sale contingency.
If only because that is the kiss of death. In trying to win.
Yeah.
I'll buy your house when someone buys mine.
Put yourself in the seller's shoes. You got a couple offers on the table. The first ones going in the wastebasket are the ones where the buyers say, I want to buy your house, but I actually got to sell my house first.
Well, so to your client's point, it's both financial and emotional stress. Like, I don't want to get out of my place that fast.
It's a logistical headache that she doesn't want to have to deal with. So she told me this, and she was very nice. She said flat out, Tim, I appreciate you helping me, and I certainly want to get this condo, but my goal is in the very near future to not have a mortgage. And I said,
congratulations.
Congrats. That sounds great. It's not something I'll be able to say for many years, but at Accunet, we are in the business of obviously putting together mortgages for people. So what we did, and what Brian, our owner of Accunet, recommended, is we actually get her connected with a portfolio lender at another local bank who can do some bridge short-term financing to allow her to get the funds to actually buy this condo in cash, knowing that her sale of her current condo will be enough to completely pay off those debts. And that was the design of those debt vehicles, so to speak, to just have them get her the cash in for a couple months.
All right, so I want to maybe just put some numbers to this. So let's say she gets a bridge loan on her old place and she's got $150,000 liquid.
Sure.
That she's going to go make as the down payment on her new $200,000 house, new condo. And the portfolio lender we connected her with said, and you know what? We'll also give you a Well, it's meant to be
50,000
temporary,
yeah.
$50,000 loan
Yeah.
on the new place that we kind of know and expect that you're going to pay off eventually when you sell the old place.
Pretty quickly, yeah. And they were interest-only payments on those two debts.
Well, because it's meant to be temporary.
Yeah, which helped her. She's on a fixed income, and from a real-life perspective, she doesn't really care if those loans are amortizing. She doesn't care if she's paying anything towards principal on them anyways, because they're going to get paid off pretty quick. So it's kind of a win-win situation.
Yeah. Well, and I think as we said when we kicked off, from a company perspective, it's better for us to be able to help her even if we're not able to help her directly.
Yeah. I tell people fairly often in the course of me doing my day-to-day business, doing right by people is more important to me than any one singular transaction, because the good vibes and the good word they're going to have about Accunet is more valuable than trying to make a quick buck, even if it's not in the client's
Was this
interest.
a particularly quick closing, or did you have a lot of time as well?
It was. It wasn't super.
Curious,
it wasn't quick, super long. I think it was a 35 or 40-day close.
Oh, so
not totally doable. Yeah.
In terms of on-time closings. So very good. All right. Well, we're coming up on our next break here. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
All right, welcome to the last segment of the Accunet Mortgage and Realty Show. It's Tim and I. Dad has off today.
Yes.
Thank you, Tim, for helping me out today. I might need you the next couple of weeks, by the way. But
happy to do it. Nice to get some young blood on the radio. Brian, hope you're
glad we've had some good stories on purchases in particular. And for this last segment, I think talking about cash out refinances, and I have a past customer of mine in particular who this is kind of the type of cash out refinance that you want to see, which is these folks they've had some nice home value appreciation, and they want to extract some equity from their home, a cash out refinance,
sure,
to make improvements to the home. I think in our email exchange, maybe redo the kitchen and maybe the basement, for example.
Great use of the equity that is built up in your home.
Yeah,
for sure.
and the general reason why is because if you're extracting the money to further improve the property itself, it's kind of a virtuous cycle, a virtuous circle.
Yeah, that money in the project goes to ideally even building the home value even further.
Yeah, and we do help a lot of folks, combine other debts or pay off other debts, and that is also a positive outcome if it helps you get a handle on monthly payments or whatever that might be. It's just it's kind of like breaking the piggy bank and you can't put the piggy back together, as opposed to, I don't know what we're doing. On this one, when you're extracting equity to improve your home, you're just shaking the quarters out of the piggy. You're not breaking the actual ceramic.
Yeah, you can always put the quarters back into the piggy bank later.
There you go. Welcome to Tortured Metaphor Mortgage. But for these folks, so what they were mostly concerned about was what the value of the home might be. Because, they, like a lot of folks, have witnessed their neighbors sell in another strong summer of sales, where I can only imagine people are like, what? You sold your house for how much?
You got how much for your place?
So for them, it was one of the cool things that Accunet has in our toolbox is, I basically call it a mini appraisal. Yeah. A desktop valuation review.
I call it the drive-by appraisal.
Yeah, which is when a licensed appraiser sits down at their desk and says, what's your address? Got it. Let me go on to the multiple listing service and see who, with a 3-bed, 2-bath, or whatever it is, has sold recently near you. And let me tell you what I think that value is. They don't walk through your house. And we cannot use that for underwriting.
Nope.
But it gives us a fairly good estimate of what the value of your home might be. Because on a refinance, the appraiser is stuck driving with their rear view mirror, which can be good. That's like, wow, my neighbors have sold for X.
Yeah.
And that's what I get to use to peg the value of my home.
Versus with a purchase.
Purchase is the buyer walks in and says, wow, this kitchen is beautiful. I will pay you X.
And the appraiser knows that. They know what two parties have already agreed on as a value for the home, a.k.a. a buyer and a seller.
Yeah. And so we are taking that intermediate step.
Yeah, dipping the toe in the water to see if it's worth it to do the full thing.
I get it. You know, spending nearly $500 on an appraisal where you're kind of feeling naked, like, I think the value of my home has gone up. Boy, it seems like everybody's selling for a pretty penny, but I really
have no idea.
Yeah, I really don't know.
Yep.
That's a good intermediate step. As you said, dipping your toe in the water.
And David, when an appraiser is especially doing the desk appraisal, when they're not walking through the home, what are the, not being licensed appraisers ourselves, but what do you think are the big criteria that an appraiser is going to use to establish current value for a home?
It's not the, what are those called? Oak shake shingles on your roof, for example. Oh, no. It's
not the mahogany bookshelves in your
rich mahogany.
Study. Yeah.
Leather-bound books. It's mostly bedrooms, bathrooms, and square footage. And ultimately what similar homes have sold for as well. So
got it.
A good story. I might have an update on that story next week.
Sure.
So as a recap, rates remain friendly, but
to not drop 0.25%.
No, not by any means. The Fed is trying to help the economy move forward, but Accunet Mortgage would like to help folks lower their monthly payment today and not play blackjack with your mortgage interest rate, hoping they go back down. So if you would like to find out how much you can save, maybe lower your monthly payment, maybe pull that first mortgage and HELOC together, would love to put those numbers together for you and see how we might be able to help. All you have to do to get started is click on the blue button at Accunet.com. That's ACCUNET.com. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.